YouTube, welcome back to the channel. If you've made it this far and watched all the other videos, I do appreciate it. We're here. We're at the end. This is the end of the, I guess you would call it the Zero to Daytrader series. This video is going to be all about the strategy, right? Taking all the concepts that we talked about in the first 4 videos and putting them together into one. So let's take it to the charts. All right, so we're back on the charts, right? And before we talk about the strategy, I just gotta let you know, like, this is a scalping strategy. And what I mean by that is there's three different types of traders. You have swing traders, meaning they hold trades for a long time. You may get in the trade on a Monday and close it out on a Friday. You may get in a trade in January and get out of that trade in March. Those are swing traders. They are trying to catch entire moves, right? You want to catch, let's go to this daily chart. You might get in the trade in September and get out when it peaks at its highest on Halloween, right? That's a swing trader, okay? A day trader is, because what was that? That was, heck, I don't know, 8 weeks. A day trader is what the name implies. You get in the trade, let's see, this was Friday. You get in the trade up here and you get out down here. You held that trade the entire day. You may hold it 2 days, right? And then a scalper, which is what this strategy is for, means you're scalping the move, right? You don't want this big whole move right here, right? You don't want to be in the trade for 8 weeks. You don't want to do that. What you're doing is you're just getting a piece of the move. That's all. So a scalper, you will be in a trade anywhere between 1 minute, 5 minutes, 1 hour, 2 hours, 3 hours, but you're really not gonna hold it the whole day. Like, you're just in and out, getting a piece of the market move. So to make this clear, this is a scalping strategy. I'm also teaching myself a good swing strategy that's been working out for me, but that'll be for another time. My main trading style is scalping. So the strategy that I use to scalp with is called the initial balance by rejection. This is a statistical based strategy backed up by 20 plus, 30 plus years of stats to go along with it. And it essentially says that during a given hour, which I have the time frames for those, during a given hour, if a high forms first, within this hour, this blue candle, this blue background right here is an hour. Like, it shows the first hour of the New York Open. It says that if the high forms in this first hour, you have a insert number percentage chance of the low breaking first. And the opposite can be said that, I don't see an example, that if the low forms first, you have X amount of percent chance of the high breaking first. So I use that information to position myself and to give myself a bias in these trades. So these are all last week's trades, right? You can see. Um, let me take a step back. There's three main trading sessions. Three main trading sessions. You have your New York trading session, your Tokyo trading session, and your London trading session. This strategy works across all sessions, across all assets, across all markets, whether it is stock market, like trading Facebook and Google options and stuff like that, or whether it's futures or Forex. This works on all pairs, all markets, all of that stuff at all times. The times that I traded are the New York Open from 8:30 to 9:30, and then I will also trade it from the New York lunch hour, which is 11 a.m. to 12 p.m. And then I also traded this entire Tokyo session. And what I mean by that is, like, I'm just not looking, like, I'm not in a trade the whole time, but from 5 p.m. to 8 p.m., I will look for a setup if I don't get something in the New York session. So I like this strategy because if I don't find something in the morning, I can look at lunch. If I don't find something at lunch, I can look at night. And this should appeal to you guys because I know a lot of you all have jobs. I know a lot of you, can only be at your computer or use your phone or trade at a certain time. So this is a great strategy for that. But just to go over it again, It says that in a given hour, if the high forms first in this blue highlighted area, which it did, the high form first, we have an X amount of percent chance of the low breaking first, right? So how I play this is, which I'm not looking at this stuff at the the whole entire hour. There's no sense in me doing that because what I do, I don't get into the play until about 15 minutes before the hour closes. Because if I sit here and watch this, I'm just gonna drive myself crazy trying to predict. Oh, is the high gonna form first? Is the low gonna form first? No, you gotta let the market do its thing. So I took this exact trade Friday. I took this trade Friday on the way to the golf course. The high form first. So like I said, I don't watch this whole thing. I usually get on the charts 30 to 40 minutes after the hour because I'm looking to enter 15 minutes before the hour closes. So the high form first, and when I got on, it was about 9:05. Right, the market opens at 8:30, and I got on at 9:05 to see what the market was doing. I see the high had formed first, and we put in a low, which was right in this area. So what I like to do is I have my bias. Okay, the highest form first, we should be going lower. What I like to do is wait on price to retrace back to this halfway level. The way this is set up, this blue highlighted area is a 1 hour range, right? And the way this is set up, this red line is 50% of the range, this is 25%, and this is 25. I like to take the entry at the 55 or the 50% level. So this hour closed, price retrace right here. Okay, my bias is that the high form first, we should be going lower. I got into the play here. We went lower, and I get out at the green line for a 1-to-1 risk to reward ratio. And as you can see, it just plays out over and over again. The high form first, I got in right here at about 9:25. We melted down to the low. Let's go to Wednesday. The high form first, I got in about right here. We melted down. It didn't take me out the trade fully because it didn't cross the green line. We came back up. Finally went back down. I was in this trade for like an hour. All the other ones, I was in the trade for maybe 15 minutes. We go back to Tuesday. Tuesday was a loser, but then I ended up trading it during lunch and it worked out. So the high form first, so we are expecting price to break down below the green line. It did not do that. I got in right here and went down, and I got out of the play here because why? We inversed the fair value gap over here. I was talking about that earlier in the other video. That's why it's important. Um, if we inverse any fair value gaps going to the opposite way of the trade that we're in, we need to go ahead and get out. I didn't even let it hit stop loss. I just went ahead and got out. Right. Came back during lunch and caught the sale because it was set up for the high to go first and the low, which it ended up doing that, and I caught the sale. So you can see this is just a pretty consistent strategy. Pretty consistent strategy. So the way I trade is I go 1-to-1. If I risk $200, I want to make $200. I might go 1-to-2, meaning that if I risk $200, I want to make $400. But I found out for me that um, risking a 1-to-1 risk to reward ratio is better for me, better for my psychology and my trading style because this trading strategy is just so consistent that I don't need to get greedy with the market. And just to show, um, this is the last 4 weeks of trading, and as you can see, I only have 2 losing days out of the last 18 days trading this strategy. It's just consistent. It just works. It's a good strategy. And like I said, I'm a beginner. Like I really haven't been trading that long, but I found a strategy that allows me to pull money out of the market every single week. All right, so I'm gonna show y'all a quick example of exactly how the strategy works. Like this is exactly how I traded it Friday. 100% how I traded it Friday. Let me go into replay mode so y'all can see where is it at. Right here. so this is the New York session. So this is from 8:30 to 9:30 in the morning, right? Like I said, I really don't get on until like 9:15 because I'm usually not getting into the trades until anytime between 9:20 if the IB hasn't set to 9:30 or anytime after that. So we are just going to go and press play. Let's see, we're gonna go forward. All right, these are all 5-minute candles. Let me see what time it is. 9:05, 9:10. I will probably just now be getting on my computer to see. As I said, this is a statistical based strategy based on when the high and low forms of this session. So far of this session, of this first hour, the high has formed. So my bias is that we're gonna go for sales and break this green line once it sets. And it will set completely at 9:30. If the trade allows me to, I will get into the trade at 9:20. If the trade does not allow me to, I will get into the trade after 9:30. However, if it breaks this green line before I get in the trade, I will not trade that day. I won't trade this asset. I'll look for something else or I'll trade during lunch or the Asia session. So I'm on the computer right now at 9:10. So I'm just watching this form. And it doesn't form until 9:30. That's why you see this little bar moving with it because it hasn't formed. But remember, I want to get up here to this 50% line. Sometimes I'll take it at this 25% line, but I want to get up here to this 50% line and get in for a sale. So we're going, it's 9:20. I'll be looking to get in. Sometimes I get in right here, but I want to get in up here. It's 9:20. Okay, let's see, we're going. All right, this blue means that the first hour has passed. We haven't broke this green thing yet right here, so the trade is still valid. Like I said, I'll get in sometimes here, but I'd rather get in at this 50% mark. So we are going to keep watching it. If it breaks down below, I just won't trade it this morning and I'll wait for lunch. All right, so we can see it made it back to my 50% line. Once it gets back to my 50% line, I am getting in. I am getting in for a sale. Like this is my key signal to get in for a sale. So I'm gonna create my limit order. My stop loss is gonna be at the top of the IB, and my take profit is gonna be a little bit past this green line. I'm gonna click sell. All right, I am in the trade. I'm setting my stop loss and my take profit. I'm gonna confirm. I'm risking $200 to make pretty much 300, and so we're gonna let this trade run out. As you can see, it immediately taps that 50%, starts melting down, goes back up a little bit, and goes straight back down. And that's the trade. And that took from the time I got in at right at 9:30, really, to the time I got out 9:40. I was in this trade for 10 minutes. So that was pretty much $300 in 10 minutes. And that's pretty much how easy this strategy is. That's how it goes. Okay, so remember I told you I use fair value gaps in this strategy to keep me on the right side of the market and keep me in line with the big orders, right? Um, so according to the strategy, if the high is formed first, which it was, you can't really tell because of this shaded area, but this red wick right here was formed first. So that means it's the high, right? So with this strategy, the high forms first, we should be targeting a break of this green line right here, right? And that all looked good up until this area right here, right around, okay, this is 910. It's a small fair value gap, but it is there. A 3 candle pattern, remember, 1, 2, 3, with a big displacement candle in the middle. There is a small gap right there. You can see it right here from this wick to this wick. There is a gap. I'm paying attention to that gap because the first presented fair value gap holds a lot of power with this strategy. If this candle right here would have tapped into it and respected it, meaning that the sellers that created this big old candle was still there, this candle would have kept going. We would have went on down and broke through the green line. However, in my fair value gap video, I told you there's two things I'm looking for. I'm either looking for it to be respected, right? Or I'm looking for it to be inversed. If it's respected, that means I'm on the right side of the market. If it is inversed, that means I'm on the wrong side of the market and the buyer or seller, in this case the seller who made this big old candle and created the gap, is no longer there. As you can see, this candle closed right through the gap, so we inversed it. I held on to the trade just a little bit longer just to make sure. We came down and shot right back up. So that means this seller is no longer here, that there's a new buyer in, and it switched the whole trend. We went from being in sales to being in buys for the rest of the day, as you can see. So that's why it's important to pay attention to fair value gaps, just to make sure that for this particular strategy, you are on the right side of the trend at that given time. So that's pretty much the strategy. And that's pretty much it for, I guess, the learning series. I'm still gonna upload videos. I'm still gonna upload informational content, but the majority of my videos going forward will more than likely be vlogs or videos of me trading, videos of the trading results, and just trading content in general. So I hope you guys enjoyed this series. If you have any questions, let me know down in the comments. This should be enough to get you trading. Um, yeah, like this is it. This is the fluff removed, telling you exactly what you need to know to trade how I trade. So, like I said, I'm still gonna be posting stuff on here. I might even live trade. I've been thinking about, setting the hours because, like I said, this strategy works over 3 time frames: the morning time, lunchtime, and at nighttime. So I'm thinking about even, just getting on live streams and trading live with y'all, entering trades, showing you how to get in and out of them, seeing if we can, make some money together. So we'll see where the future goes. But this concludes the learning series. I hope you enjoyed it. I hope you learned something. Appreciate you for stopping by. Peace.